Good morning. Today is Wednesday, September the 27th. The time right now is 4 minutes to 11 in the morning. Overnight, we have very little activity in the sense of there is very little high impact economic news. In fact, the whole of this week, we do not have any major high impact news until Friday, in which we'll be hearing from the personal consumption expenditure, which is the PCE, a number that the Federal Reserve do watch out for inflation. So in the meantime, equity markets has been reeling largely on the back of the surging yields in US Treasuries, which is actually sucking up a lot of liquidity from equity markets into the bond market because of the relatively high yield. Now we can see that in the cash index, the Dow Jones Industrial Average on the 4 hours time frame has again dipped into 33,569.6 overnight, which is right into this bracket of prices which I've highlighted at 33,400 to 33,677. And equality move of this three-wave pullback from 35,679 will actually hit the 33,420, and we are now very, very close to this level. We will see whether tonight it can get into this level or not. And if the market does not accelerate below the 33,000 levels, then there is hope for a rebound. However, if the market accelerates to the downside going into October, then everything else will be off the bat, meaning to say that we are in danger of seeing a significant pullback in equity markets if the market does not hold at 33,420. Okay, in the S&P 500, in the cash index, we are seeing a similar pattern. We are seeing a three-wave pullback from 4,607. Last night low was 4,265, or rather 266, which is well into this bracket, and it has already hit equality. The level is 4,269.5, and we are already there. So now we are looking to see if the market can be contained in this bracket of 4,260 to 4,300 points. And if the market do accelerate below 4,001, then like I say, something more sinister could be unfolding. So do look out for that as well. In the Nasdaq 100, we are seeing a similar three-wave pullback. It has yet to hit the equality level, which is currently at 14,245. And we are not that far away. We are right now in this bracket of prices, which should be able to hold. And unless the market accelerates to the downside, we do expect some kind of rebound going on. However, like I said earlier on, if the market accelerates to the downside below 13,400, all is gone. Okay, meaning to say the market would have already peaked, and we are looking to a very weak closing for the year. Over in Hong Kong, we are seeing prices stabilizing this morning at 17,381. So, but the overall look and feel of the Hong Kong market, although it has rebounded somewhat this morning, is looking pretty weak. And I think it's over time, I think the market will actually go into the 16,700 to 16,900 range, which is the next area of support. So do look out for any kind of sharp drop in the Hang Seng Index. And over the Nikkei, we are seeing the market dip this morning to 31,740, which is just a whisker away from the immediate bottom here at 31,540 to 31,680. And again, this does not look good because the overall structure suggests that at some point in time, the 31,250 may be challenged one more time. And over in the dollar, we can see the dollar index remains very, very firm. This morning, we have a new high at 106 even, and if the market continue its current trajectory, it looks like it is going to go higher to 106.70 to as high as 107.15. So this is going to be the next area in which the seller may actually emerge. However, having said that, the current yield in US Treasury is causing a lot of capital to move into the treasuries, which actually push up the yield. And tomorrow, we're going to see a massive amount of new auction for new issues of treasury bills, and this is underpinning the dollar itself. So after tomorrow, we may see, we may get a better picture. For the time being, I think the pressure is on the dollar to go higher because the US Treasury is issuing a truckload of new issues come tomorrow auctions. Okay, so do watch out for that as well. And in the principal currency, we can see euro dollar has been pressured as a result of a resurging dollar. We can see the euro dollar is currently trading at 1055 levels, and it is within this bracket of prices, which I think it should be able to hold. And this area is 105.16 to 105.65 levels. Let's see whether that is the case. Over in sterling, it remains very, very weak this morning. There was hardly any rebound. The low traded was 121.40 this morning. The nearest bottom in which demand may actually emerge is going to be at 119.70 to 120 even. So 120 is going to be a very nice round number. So hopefully it can actually hold. Okay, but overall, because of the dollar strength, all other currencies looks to be relatively weak. The only exception here is possibly the Aussie dollars, because the Aussie dollars has been trading within the band of prices demarcated by 0.6350 to 0.6520. So between these two boundaries, the market is basically consolidating, and prices has dipped into the lower end of this boundary, should be confined to 0.6375, 6360 to 6390 levels. And if we are lucky, we may be able to see some kind of rebound coming as the market dip into this bracket of prices. However, this is still on the condition that the dollar do not surge too much. If that's the case, then there's a danger that the bottom here may actually give way in the Aussie. So look out for 0.6350 levels. If the market can hold above this level, it may look like a decent buy here for a short-term trade. Dollar yen is definitely pushing the boundary. You can see dollar yen last night went at 149, almost 19, and there is nothing in between where it is right now, all the way until 151. So there is going to be at least 200 more pips to go before we are seriously looking at intervention levels. Anything above 150 is definitely intervention levels, so be on the vigilant. Okay, dollar Canadian has seen a bit of a rebound, and this rebound may actually extend a little bit higher to 135.70 to 135.90 before it comes back down again. I would love to see prices come back to 131.40 levels. So I think this will be a much better level to actually buy dollar versus Canadian. Okay, let me see what else. And crude oil. Crude oil remains elevated. We see that the price actually dipped to $88.19, but was quickly supported, and see the market push back to $91 per barrel, currently trading at $91.11 in the futures contract for the WTI. And this barrier of prices between $91 and $93.75 seems to be a big mountain to climb. I do not believe the price will actually punch beyond $94, at least not now. I think the market is likely to come back down, ideally back to $96. Okay, I'm still looking to buy anything below $96. Over in spot gold, gold actually came off in a big way because dollar strength is definitely capping any kind of advanced prospect for precious metals. We can see that the spot gold has already tested at 1900, has actually dipped marginally below at $1,998.80 this morning, and the nearby support is likely to come within $1,885.40 to $1,902.40. So watch out for price to stabilize around this bracket of prices. And over in the silver is also retreating and currently trade to a low of $22.71 this morning, and it looks like it may go back and revisit the $22 one more time. And if it does, then it will create a triple bottom, ideal for a speculative long position. In Bitcoin, because definitely the Bitcoin is drifting, there is hardly any news that can cause Bitcoin to rally, especially going into this Saturday, with the danger of a government shutdown in Washington. And if there's a government shutdown, the SEC will not be functioning at full strength. In fact, 90% of their staff will be asked to stay home without pay, and that means any kind of application for license in regards to the spot BTC ETF license will be in limbo until governments comes back again and they get the funding. So in the meantime, I think the market is likely to go down rather than up. So let's see what else can happen. Right now, the market is holding very, very well above the 26,000, but this could be temporary. Let's see what happens, because I think at the rate it is going, it has already pulled back 3 waves from a high of 27,515, and 25,800 to 26,000 seems to be the immediate bottom here. Let's see if it can hold. In the event if it does not, the next level of support will be at 25,000 levels. So watch out for these levels. Okay, in the meantime, this is all I have for you, and you take care, and I come back to you tomorrow with another update. Bye bye.